Hey, my name is Joe Polyak, local San Francisco Bay Area real estate professional with Rise Homes. And I make videos like this for people like you if you're thinking about buying, selling, investing in real estate, or you're just interested to hear what's going on in the market. So this video is a San Francisco County and San Mateo County real estate market update. I'm just going to kind of review some of the data. I'm going to do my best to highlight the main points so that it's not too boring and dull. So let's just dive right in and see what's going on in the market. Well, let's discuss San Francisco and see what's happening in the city. Let's start with the San Francisco market update, the monthly indicators report that's provided by the San Francisco Association of Realtors. So nationwide, existing home sales fell slightly by 2% in the month of August. And that was primarily exacerbated, most likely, or that happened in conjunction with the rise in prices. So median home sale prices nationwide are up basically 15%, it looks like, year over year. A couple of things for the San Francisco market is that new listings were down 14.6%. So new listings are the number of homes that hit the market in a month. So the new listings that hit the market in the month of September for single family homes were down 14.6% and actually down 29.3% year over year in San Francisco. And that has a lot to do with the fact that we were in the pandemic last year, and when the pandemic struck in March of 2020, for a few months, nobody was listing their homes for sale. And then about 3 to 6 months later, everybody who was going to list for sale in the springtime ended up listing for sale around these months, August, September, October, which kind of pushed our seasonality, our usual seasonality, back a little bit or forward. And so when you review it in that context, that's not such a crazy number that new listings were down 14.6% for single family homes and 29.3% for condominiums. Pending sales, however, increased 14.2% for single family homes and 8.8% for condominium. Again, same thing, because of the pandemic, a lot of people didn't list their homes for sale, and a lot of people were on the sidelines and didn't buy for the beginning. And then after a few months, people decided to list their homes for sale again, and a lot of buyers decided to move on with their lives and try to buy homes. And as you've probably seen and heard, that has led to just an insane 2021. There are signs that the market may be shifting, however. So new listings have continued to hit the market, bucking seasonality trends commonly seen in the fall, a time when listing and sales activity typically slows as children return to school. As inventory increases, competition for homes may soften and could even bring a moderation in sales prices, which after 114 months of year-over-year gains would be music to the ears of home buyers throughout the country. So that's true in San Francisco, and as you'll see, that's true in San Mateo County, that obviously the market has been on fire. But what's happening right now that I'm seeing on the front lines that hasn't been reflected quite yet in the data, because the data right now is looking at the month of September, because we're still in the month of October and we haven't received the data for the month of October yet, at least when I'm making this video. What we are seeing right now is actually a lot more inventory and a lot more homes hitting the market during these September, October months, that a lot more so than we've seen in previous Septembers and Octobers. So it's going to be interesting to see, because it seems that demand is down and inventory is coming up. So when demand is down, supply is up. In theory, that should have an effect on prices and activity. I'm not necessarily seeing that quite yet, but what I am seeing is a bit of a slowdown for some homes in some areas. Not everywhere, of course. So let's jump right into it. We talked about new listings being down. We talked about pending sales being up. Sold listings down just 4.7% September year over year, but year to date up obviously 42%, because we had a big 2 to 3 month window where there was not almost any sales happening during the pandemic, or in the early stages of the pandemic. Median sales price up 6.1% for single family homes in the city of San Francisco. And year to date, that's for September, the month of September year over year. And year to date, it's at 1.8 million, which is 11.1% up from the previous year to date, 2020. And so, which is actually lower than the national trends, and also, as you'll see, much lower than San Mateo County, which is actually quite interesting. And what we have been seeing is a bit of that flock to the suburbs with a good school district and the yards and the ample street parking and all that kind of stuff. It's actually not surprising to see this, but we'll see the data in San Mateo in just a little bit. Average prices, though, up quite a bit, 14% for both of these data points. Days on market down from 25 to 22. So that's the average days that a home is sitting on the market from when it's listed for sale publicly on the MLS to when it goes pending or an offer is accepted. But then remember, there's also the escrow period, which if it's an all cash sale could be 5 to 10 to maybe 15 days. Or if it's a mortgage, if they need to take a mortgage and there's a loan on the property, then oftentimes it can be anywhere from 20 to 35, 40 days. Obviously, active listings has dropped significantly from September 2020 to September 2021. And again, that's due to the pandemic and the big kind of glut of homes that didn't get listed for sale during the early months and then ended up getting listed for sale in July, August, September. A couple of metrics that are pretty important as well is that the percentage of properties that sold over the list price was 84%, over 65% for the month of September. And then year to date, 77 or 78% over 66%. So that's obviously up quite a bit. So what that is obviously telling us is that if you know anything about San Francisco real estate or San Francisco Bay Area real estate for that matter, you have seen that homes have been selling significantly over asking price for a long time. And that's been a strategy implemented by a lot of agents. And what you'll see oftentimes is a home listed for sale for $995 or $1,095, and then it sells for $300,000, $400,000, $500,000 or more over the asking price. Very normal, but after the pandemic began, that trend actually softened and stopped for a little while. So we didn't see homes selling for significantly over asking price as much as years past. But that trend has just completely 180'd, and now the percentage of list price received in September of 2021 is 16%. It's over 16%. So that means that on average, homes in San Francisco, single-family homes, are selling for 16% over asking price, which is pretty insane if you ask me. And year to date, it's a little bit over 14%. So basically almost 15%. Homes are selling for over asking price. Let's discuss month supply quickly. So month supply went from 4.8 to 2.0. So that dropped by 58%. How to calculate months of inventory. So months of inventory, more commonly known as months of supply, represents how long it would take to deplete inventory, assuming no new inventory is purchased or put on the market. It's commonly used in the real estate industry to determine the health of a particular real estate market. So to calculate it, you basically identify the number of active listings on the market within a certain time period, but the time period is the month of September. We identify how many homes were sold or pending sale during that same time period, and we divide the active listings number by the sales and pending sales to find months of supply. For example, say there were 500 active listings in February and 125 sales and pending sales. Months of inventory is 500 divided by 125, or 4. That means that if no new homes are listed, it would take 4 months for the homes currently on the market to sell. When it's a 4.8 months of supply, what most economists or real estate professionals will say is that anything between 4 to 6 months is a market in equilibrium. So meaning that it's not a buyer's market and it's not a seller's market. More than 6 months of supply of inventory means it's a buyer's market, that it's a lot harder to sell a home, and there's a lot more sellers than there are buyers, and sellers are doing anything that they can to sell a home. As you have probably know, unless you've been living under a rock, is that we've been in an extreme seller's market since about 2012 in the San Francisco Bay Area at least, and more recently in the entire country. And so right now we are back to being just 2 months of supply. So we are in a very strong seller's market. Condominiums, it's pretty much the same story as single family homes, so I won't bore you with it for too long, but obviously we talked about new listings, we talked about pending sales. Sold listings is down 12.7% actually, which is a little bit surprising. I would think that the number of listings sold would be more or more than 2020 of September, but it is what it is. And so the median sales price, average sales price are up just a little bit, which shows that the effect that the pandemic had on the San Francisco condominium market is largely still intact, although we have been seeing it going on an upswing. But what that means is that the pandemic, I feel, drew a lot of people out of high-priced, high HOA, center of the city or close walking location of bars and restaurants and things, kind of condos. It drove people away from those and more to the suburbs and more out of area, more affordable areas, because they can work from home and be able to make the same amount of money, and everything is closed anyway. And so it caused a little bit of a crash in the condominium market in San Francisco. But now that the pandemic is not necessarily over, but at least we are it seems like we're over that major hump and we are going back to normal, and restaurants are open, and we still have mask mandates and vaccine mandates in the city of San Francisco. Although all those things still exist, everything is pretty much open. You can go to Giants games, you can go to 49ers games, you can go to Warriors games, you can go to restaurants, you can go to bars, you can go to the park, and life is almost normal aside from masks and vaccines and things like that. So we're back to almost being normal. So I feel that the condominium market will continue its uptick again as more and more companies begin requiring at least part-time being in the office. And things open back up, I think we will start seeing more and more people coming in and demand rising, supply continuing to go down, and we will see an increase in the market, assuming that interest rates stay low and the economy still keeps chugging along as it has been. I think we'll take a break from San Francisco now, or finish up San Francisco, and let's jump in to San Mateo County. Okay, so let's move on to San Mateo County real estate. We're going to start with the third quarter because we just finished up with the third quarter. So we're going to review third quarter 2020 with third quarter 2021. I'm not going to go into detail about the different cities within the peninsula, although this is really helpful. And so just like with anything else, if you are interested in this, we will add these links and these documents in the description. And also you can feel free to contact me. My contact information, email address, phone number, everything is in the description as well. If you have any interest in buying or selling real estate, or just want to know a little bit more, discuss some of these statistics or what's happening in the market currently. A couple of top level things that we're seeing is that new homes is basically the same. Third quarter to third quarter, 2020 to 2021. The number of new homes that hit the market hasn't really changed very much. But obviously, what did change quite a bit is that the inventory. So the inventory number that you see here is the number of homes that are left for sale at the end of the period. So at the end of third quarter 2020 and third quarter 2021 on the last day, so I believe that was September 30th, but that's how many homes are left for sale at that time. And so obviously that's important to see because the number of homes left for sale is our supply, basically. That number is down 18% year over year from 2020 to 2021. So from 705 to 575. So that's pretty significant, obviously. And then the number of sold homes was up quite a bit. It was actually up also about 18% year over year, third quarter 2021 from 2020. Obviously, the inventory being down, number of homes being up, signifies that it's a hot market. And actually, the next stat is average DOM, which is average days on market. And so that's the number of days that a home sits on the market from when it's listed until when an offer is accepted. And so that number went from 28, which was historically in San Mateo County over the last 10 years that I've been reviewing this data, it's hovered around there. Like it's been in the mid 20s, sometimes the low 30s. But right now at the end of the third quarter for the third quarter 2021, it's 17 days. That's in the entire county of San Mateo. And that's really insane when you think about it, when you look at just all these cities that with the median prices and the prices where they are, and just homes are selling in a little bit over 2 weeks on average. It's really insane. It's the only way you can describe it. The market is still on fire, but as I discussed a little bit, we are starting to see a little bit of a shift that hasn't been reflected in this data yet, which is happening right now, which is what I'm feeling. This is a little side note here. And what I'm feeling as a real estate agent and talking to other real estate agents and talking to other people in the market is I'm seeing a lot of buyers who were very motivated, who got their IPO money, who wanted to take advantage of the low interest rates and were just motivated and wanted to buy a place and move into a place quickly, a lot of them already bought. And supply was low, but now supply is increasing and we're seeing a lot more supply. And then a lot of the other buyers that were in the market that maybe were, fifth, fourth, third place out of 10 offers, and we're coming in with reasonable offers based on the comps, but we're getting blown out of the water by offers that were significantly above the comparable sales and above what the market suggests that these homes are worth. A lot of those buyers who were making reasonable offers became discouraged and disenfranchised and are kind of like, I'm tired of this. I'm tired of making reasonable offers and even offers above the comps and still getting blown out of the water. So a lot of them got discouraged and left the market, is what I'm feeling. So based on that, I'm seeing right now an uptick in supply, and I think this will be reflected in the data. I'm seeing an uptick in supply and a drop in demand. So I think if you're thinking about buying a house right now, this is my message to you. If you're working with a realtor, if you're not working with a realtor, and you are thinking about buying a house right now, this is the time to get in, because you're not necessarily going to get a good deal. In fact, you probably won't get a good deal, but at least you'll get a fair price, a fair market price, and you'll be able to beat out the competition. And interest rates are still very, 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 very low, which we can talk about later what that means to your buying power. If interest rates go up, but the average prices drops, you're still paying the same thing for the same house, and you spent less time being a homeowner. That was just a side note. So median price, again, as I mentioned when I was reviewing the San Francisco data, median price went from 1.76 in third quarter 2020 to a whopping 1.910 million in 2021, third quarter of 2021. So the median sales price for single family homes in San Mateo County is almost $2 million, which is insane. And then we have the median price per square foot number. Obviously, that jumped up over 10%, $1,122 this year from $1,000 last year. So it's over a 10% increase. Again, it's just crazy. So, and months of inventory went down from being 1.7 last year to 1.2 this year. So that's where we see a difference in the San Francisco market, is that the market took a lot longer to recover in San Francisco last year because of the number of people moving out of the city, whereas right now, the market is recovering in San Francisco, but in San Mateo County and the other counties, like areas like Santa Ramon, Danville, Novato, other areas throughout the Bay Area within maybe like a 1 hour or 1.5 hour drive to Silicon Valley, have increased quite a bit and have gotten a lot busier because of people not needing to commute and being more interested in great school districts and okay with being a little bit further out. So that's really showing in the data. Okay, let's jump to September 2020 versus September 2021 rather than the third quarter data. So basically, new homes, inventory sold, it's essentially more of the same for the third quarter stats, so I'm not going to bore you with it, but it's basically painting the same picture overall. Same thing with the days on market, the average prices, and the median prices. So days on market is down, average and median prices are up. And we're just seeing, for me personally, I would say this is definitely the hottest that I've ever seen the market. For the third quarter, September was a pretty hot market as well, although not as hot as the spring, in my opinion, although prices did increase. It's just not the same level of craziness. And right now I am seeing things are slowing down quite a bit, or not necessarily quite a bit, but they are slowing down. Now, one of the things, though, that I didn't talk about for third quarter data, which I want to talk about right now, is that the average list price to sales price ratio. So before the pandemic, as everybody knows, we would always do the low list price and sell for higher. Then pandemic hits and we stopped doing that as much. And, we started deciding to list closer to what we expect because we were concerned and didn't know what to do. That trend reversed again quite a bit. And now homes on average in San Mateo County are selling for 9% over asking versus 2% a year ago over asking. And the reason why that's a little bit calmer than in San Francisco is in the city of San Francisco. And in fact, cities like Oakland and Berkeley and a lot of cities throughout the East Bay as well, it's just not as commonly done in a lot of the peninsula, like along the coast, Half Moon Bay, areas like that. And even in the Mid-Peninsula and a lot of the higher priced areas, it's not done as commonly or as aggressively. And there's a lot of higher priced areas like Hillsborough and Atherton, which feed into this data quite a bit as well. So it's not as aggressive, but in general, on average, homes are selling for 9% over the asking price. That's the data for single family homes in San Mateo and the data for all condos and single family homes in San Francisco. I'm not really going to talk about condos in San Mateo County right now, but if you're interested in that, I did put the data in there so you can review it yourself. It's in the description, and always I'm happy to discuss it with you, and then I might do it on a future show later. It's just I don't want to overwhelm with so much data and discussion here. Let's talk about mortgage rates. So obviously, mortgage rates have been at rock bottom. So I actually recently got a modification approved by Bank of America. They just, for $950, they sent me a letter and said, well, my B of A mortgage guy called me and said, hey, you're actually approved for a modification. Out of nowhere, calls me. You got to pay $950 and we'll drop your rate down to 2.75. And I had a rate, I believe, of 3.25. I started at 3.85. They did this modification for me before, got me down to 3.25. And for $950, they dropped me down to 2.75. And that was kind of all across the board, as a lot of people have been getting. I've even seen people get the sub 2.5. They had to pay it down with points and all that kind of stuff. But I've seen people get sub 2.5, but on average, I was seeing people getting 2.5 to 2.75 for jumbo mortgages, which is over I believe the limit was 822,000 or so. And so, which is insane, Getting under 3% already is crazy. Under 4% is crazy. So right now, it looks like, and I am hearing that this is ticking up slowly. So right now, the averages that I'm hearing about are about 3% and sometimes in the low threes. Mortgage rates right now are starting to hover around that 3% mark, and they are moving up slowly. People always ask me, what do you think prices are going? And what do you think mortgage rates are going? And things like that. And, I hear people giving their opinions, and it's okay to have an opinion, obviously, but I'm not confident in my predictions because there's so many variables. I don't know anything about the Fed. I don't know anything about the political and the monetary policies and what behind the scenes conversations they have and what's important and what their thinking is in economics. And in fact, none of those people really do either. The biggest, brightest minds, Alan Greenspan, kept interest rates super low. He was, the wizard, the most genius person, and he admitted to making huge mistakes that helped contribute to the financial crisis. So the world's smartest people, machines, robots, none of them know. I definitely don't know. I sell houses, right? That's all I know. But if I had to guess and make a prediction, I would guess that interest rates are they're not going to continue to increase, but they're probably going to hover around this range of this 3% to maybe up to 3.5%, but probably not above that for quite some time. I do believe that, and I also feel that it'll probably be the same. We're not going to keep seeing the skyrocketing asset appreciation that we have been. I think we are going to somewhat level off. Now, historically, still interest rates are very low, and housing prices are very high. So, take that with a grain of salt and take with it what you want, but that's just my opinion. I'm probably going to be wrong because I am just one person, and most of my time I am thinking about how am I going to help get this person inside of a house? How am I going to help sell this person's house? What are the things that I have to do? Schedule their movers, coordinate with them. That's what I think about. That's what I do all day. So it's going to be pretty egotistical and ridiculous of me to act with any kind of confidence that I can actually predict anything. So if you have a real estate agent or even, somebody who's an economist or whatever, and they have this confident opinion about what's going to happen, they are pretty much confident in them rolling the dice. And if I'm rolling the dice in Vegas at the craps table, if I'm rolling the dice, I'm not confident. It's 100% luck. Simple as that. So it's the same thing with these people who have predictions, in my opinion. Sorry, fellow real estate agents who do that. Okay, perfect. This video was very long. I hope you enjoyed it anyway. And if you have any questions, as always, feel free to contact me. My contact information is in the description below. All of these links to all of this data and the links that I pointed out and I walked through is in the description below as well. feel free to reach out. I'm happy to help. My name is Joe Polyak, local San Francisco Bay Area real estate professional with Rise Homes. And I help people like you who are thinking about buying, selling, or investing in real estate. And I'm happy to chat and answer questions and things like that. Thanks so much for watching this video, and I'll see you in the next one.